Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Carl Turner. He is the head of business development and partnerships over at Crypto Compare out in London. It's great to have you with us, covering one of my favorite topics, crypto asset data and indexes. And Carl, we're starting to see several indexes appear on the market. Tell us more about Crypto Compare indexes and how they differ from what's available out there.
Okay, yeah. So I'll give you a little briefing on Crypto Compare. So basically what we do is we're a market data aggregator in the space. So pulling transaction and order book data from about 160 exchanges. And with this, we create reference pricing and indexes. So we work with a company called Embis. It's a subsidiary of VanEck, the large asset manager here. We create a family of indexes, and they're mainly designed to be used as a basis for financial products. So investability in crypto and crypto indexing is a little different than traditional stock, obviously,
right.
Or equities. So, yeah.
So who are your typical clients that would use Crypto Compare indexes, and what do you offer them?
So on the index side, so we have our reference pricing and market data. So on the index side, like financial indexes, it would be people looking to launch funds. So this would be derivatives platforms, futures providers, CFD providers, someone looking to launch a private index fund. And then on reference pricing, there's a lot of clients that use it. So it can be custodians, fund administrators, anyone looking for valuation in crypto historically and in real time on an aggregate or an exchange level. So.
All right, now do you think that we'll see more crypto indexes evolve from Crypto Compare?
Oh, absolutely, yeah. I mean, we have a family of 30 right now, and these range from single names and up to like at least 100 coins in an index. We also do a lot of work on custom index and white label indexes. So if someone has a specific view or they want to do something, they want to build their own index, have it outsourced by a third party, we can do that for them.
So it's customizable just like a traditional stock index?
Exactly, and it's done by a third party, which kind of eliminates the potential for a conflict of interest, basically.
All right, now it's no secret that it can be challenging collecting and validating crypto asset market data. Tell us where some of those challenges are. Yeah,
I mean, there's a lot of challenges in this space. So we're pulling data from all these exchanges on a transaction level rather than just snapshots. So basically, there can be different tickers for different coins. Like on Kraken, it's XBT for Bitcoin. A lot of other exchanges have it as BTC. These are small problems. They can be very big ones internally if you're writing code. Other problems can be bad APIs, them changing the source of the data or information in the data that we're receiving, rate limiting from exchanges, and then just bad data. So
yeah,
it can be double trades, bad timestamps. So there's a lot of things, but we work really hard to kind of address these and provide a single endpoint that clients can come to get data from and know that it's validated, it's been cleaned. So.
Well, it's a relatively young industry, so that's going to continue to evolve.
Yeah.
So tell us about your experience with Nasdaq Contributor API and how your crypto indexes have benefited from that service.
On the Contributor API, I don't think we actually use them on the index side, but we're working with them on Quandl. So we're launching a reference pricing data product with them. So that's been great. We really enjoy the Quandl team. They have a really interesting platform. Yeah, I mean, they're very collaborative. We're going to launch more data sets in the future with them. So yeah, it's been exciting. All
right, now to wrap up here, let's look at your crystal ball. What do you expect to see in the next 12 to 24 months with blockchain and crypto assets?
Always hard to say. I'd say like being in here for a consensus, versus last year, it seems like a lot of the riffraff has kind of left the space, which is a good sign. So I think we're going to continue to see infrastructure being built, more serious financial markets participants getting involved. We certainly get a lot of inquiries from these clients. No one really with an axe yet to really do something, other than your Fidelities and these larger institutions. But I think we'll see a lot more of that, and I think we're going to see hopefully the price go up. So.
All right. Well, that certainly is encouraging, Carl. Thanks so much for joining us.
Thank you very much for having me.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.